Good more earnings. I'm the Nerdy Scientist, and today I want to take you back to the basics. I want to explain to you how the price moves, and yes, you are correct. Irrespective of the method you use for your trading, price is normally manipulated. There are people or organization or institute that moves the prices, and for you to be profitable, whichever strategy you use, whether you are a fundamentalist or whether you are using technicals, you need to trade with the people or the institute that move the markets. Okay, so market, as you can always see, it's constituted of candlesticks. A candlestick it defines the price movement within a duration of time. This can be from a second, 1 minute, 1 day, or few hours, or even weeks. Okay, so if I was to group the market, I would generally say we have the Asian market. Often we see the market raging, then we see a manipulation right before we enter the London trading session. As you can see in this picture, those weeks, which we'll describe later, tells you where the manipulation happened. So the market is either on an uptrend or a downtrend. When do we talk of an uptrend or a downtrend? Every price action can be grouped into a candlestick, and every candlestick has what we call an opening price and a closing price. If the open is lower than the closing price, that means we're on a bullish situation. If the open is higher, as you can see in that red candle, is higher than the close, that's a bearish. So you started at a high price, but you ended up with a lower price. Okay, so the candle patterns can be like just one candle or several candles combined. Personally, I don't want you to memorize too many of them. Just learn about the hammer, whether it's the inverted, and then the bullish engulfing, bearish engulfing, and the morning star, evening star. Those are the main reversal patterns that you see. So the lines you see above either of the candle, those are called wicks or the shadows. And the green and the red, that's the body. So I'll show you in an example in the following video.
Candles are very important in the market. If there is something that you should put your mindset and you should make sure you understand more very well and better, not just cramming. See, when you see a harami or when you see a doji start selling, no, you have to understand the reason behind that rejection candle, the reason behind that engulfing pattern. You have to understand and you have to use it to predict the market, because every shape of a candle has got a hidden meaning and can predict for you direction. And today I'm gonna start teaching you about it, and I'll give you an example of it. I'm highlighting this candle. Yeah, hope you can see these two candles that are of the same shape. Have highlighted it. Okay, they are so unique in the market. Okay, another thing is I want you to look at this week. Look at this week. This is a stop hand. Its function is to hit your stop loss. Okay, the reason why this thing has been formed here is so many people are selling, and the only way they can get them out of the market is to make a stop hand high and hit that stop loss and then drag the price back down. The wick of a candle is very important, and you have to understand it. Every wick, okay, every wick is very important. I know so many people must have mastered that this type of candles, when you see these candles with the same shape and same size, it is gonna mean that it is gonna sell. This candle, you must have understood that this is a stop hand. So that mentality of thinking that this is a doji or this a hanging man, yes, it is fine, but you have to understand the reason why it has been formed here. This is a stop hand. Why has it formed? The stop hand has been formed in the aim of hitting the sell stops. The stop losses of people who are selling. Okay, so that after hitting their positions, then a few, maybe 1 or 2% or even 5 can remain in the market, and all the other 80 or 90 are out of the market, and their money is already gone. Okay, So basically, I love trading after a stop hunt. This is the best point to trade. So let me tell you something. You can know the strengths of either the buyers or the sellers by checking the size of the wick or the tail. So there's some people who don't know what I mean. This is the tail, guys. If you look at these wicks here, these are tails, and this is the real body of the candle. Okay, so for you to do that is you're gonna check the length of the body and also the length of the wick. Okay, remember, when a candle is being formed, it is gonna be a fight. Okay, let's say a bearish candle is gonna be forming. It's gonna be a fight between the sellers and the buyers in any time frame that you're gonna be dealing with. Okay, so let's say price is gonna open. Okay, let me give you an example. Look at this point. Do you know that buyers pushed the price all up to here? Price reached here 1.235007, 1.23507. That is where price reached. But after price reaching here, the sellers, there was a strong bearish force and it had to drag back the price back down until price closed near the open, making the candle so small. And when you look at this type of structure, this type of candle plus this long wick, you can see the wick is so long, so insane wick. And this tells you that this is stop hunt. You don't have to have this type of mindset that, hey guys, this is a doji, we're gonna sell. You have to know the reason why this type of wick is so long. Why is this wick so long? It is because it's a stop hunt and its aim is to hit people's stop losses, especially those who are selling. Yes, they're selling, that on the right track. Yes, they're selling that on the right track. But the question is that the dealer doesn't want to see that, so he has to make a stop hunt high so that he hits your stop loss. Then the direction continues, the sell continues. That is trading. That is what trading is, guys. That is what it means by trading. Okay, so this long wick, this is where price reached. As I said, this is where price reached. Buyers pushed the price all the way from here up to here, but they failed to cross the price here. Then sellers had to come in and put some pressure and drag back the price, and the buyers had to close below here. So this is done why this wick is so long. Whom is it targeting? Is it targeting the buyers or it's targeting? You have to know that every point at which the dealer does, every candle is either targeting a buyer or a seller. So at this point you can know that so many people are selling. So many people are selling, and the only point the dealer can get rid of them is by making the stop and to hit the stop losses. This. When you see these pairs, they call it trailer track, I think, yeah. When you see these pairs, you're only going to wait for a bearish candle, then start selling it. After a bearish candle forms, start selling. So this is our bearish candle it has formed here. Okay, so what is a trader gonna do? He's going to sell it from here. So that is the poor mindset that we started learning. Okay, that is not a confirmation, guys. That because you have to know the dealer is always on your neck, trying to confuse you, trying to take your money. How do you keep your money? How do you trade in line with the dealer? When he buys, you buy. When he sells, you sell. So the trader is gonna sell from this point here. He's selling from this point. Okay, you're selling from that point. Then the dealer makes a stop hand high. Up here. Up to up here. That's all the stop hand. How many pips? You're already out. You're already out. Okay? Again, let us sell after the stop hand. Those are the traders who gonna eat their money. Let us sell after the stop hand. That's why I told you the best time to trade, guys, is when London opens and when New York opens. This after price doing this, you're gonna look for your last bullish candle, which is here. And price retested. Price retested. Price retested to the order block, and then it went back down.
I trust you learned something. This technique works on both forex and cryptocurrency. Next video I'll do on how to determine the price direction. Remember, it's either an uptrend or a downtrend, or the price is ranging. So how do you know whether the price is on an uptrend or on a downtrend? And because that's the time you decide whether to buy or to sell or to stay out. So to do that, make sure that you subscribe to the channel so that you can learn more. I have also done other videos before, so you can check them out. Bye for now.